I'm Ashton Addison from EventChain for Investmentpitch Media and FinTech News Network. And today on Blockchain Interviews, we have Baxter Hiens, the CIO of Honeycomb Digital Investments and the author of the book, Digital Finance. Baxter, welcome to the show, and thanks so much for taking the time to be here.
Thank you, Addison, for setting this up. I really appreciate the time.
You're very welcome. I'd love to just kick off our time by first hearing a little bit of your background in finance and what led you to start writing digital finance.
Sure. I feel like I've got a very unique background for writing a book like this. When I first got out of college, I worked with Reuters in the financial market data business, working with a lot of financial companies with their data feeds, with their systems and analytics tools. And then I went back to business school and got into the traditional asset management business, where I've been for the last 15 years. I worked as an analyst for the Teacher Retirement Systems of Texas, which is one of the biggest institutional money management plans here in the state. And then for the last dozen years, I worked for a company here in Dallas called NFJ Investment Group, which later got bought by Allianz Global Investors. And there I was a portfolio manager for long-only stock portfolios, where we focused on income strategies for our investors, which included clientele such as pension plans, mutual funds, and high net worth individuals. I was one of 6 of the portfolio managers there. We oversaw almost $45 billion in assets. And so I think my broad experience gives me a very interesting perspective on how these financial systems works and where I can really spot these inefficiencies. So, in terms of how I got into blockchain-based assets, I really started researching the crypto market several years ago, and I got fascinated, just absolutely fascinated with the technology behind Bitcoin and Ethereum, the blockchain itself. And I realized that if you could take a Bitcoin, or you could take something like a digital currency, like say Tether, you could put that on the blockchain. You could do it for anything in the financial industry, whether it was a fund, shares in a corporation, you name it. And so I realized that this technology was going to have widespread ramifications for our financial system, and it was going to start to affect mainstream assets like stocks, bonds, real estate, intellectual properties, and it was going to open up all kinds of better, faster ways and cheaper ways of trading these assets. So that really got me excited, and I wanted to learn as much as I could about the topic.
Definitely, and that's a great background. Thank you, Baxter. And there is so much changing right now in finance, especially throughout 2020 with the pandemic and the markets becoming hot. And it seems like Bitcoin and the blockchain industry has also become quite the topic of discussion. And with all the experience, you've seen the shift from the beginning, to the end. And people like us that haven't been involved in the traditional finance industry before, it can be very confusing, or can be technical if you haven't studied it for a while. But there are a lot of people that are getting interested right now. So what specifically, there's so many things to cover in digital finance. There's so many different industries, especially with blockchain, that it's going to affect. But can you talk a little bit about what you primarily are writing about in the book, and why is it so important right now that people are reading it?
Absolutely. So, the focus of the book is how this new, better, faster, cheaper technology, the blockchain, is going to disrupt the financial system. And I focus on really the 3 broad categories of digital assets. So cryptocurrencies, digital currencies, and finally security tokens, which is the vast part of the book. And then I also cover a lot of the ecosystem that goes around it. So the trading, the custody, the all of the other intricacies that are necessary for a fully functioning financial system. Mm-hmm. And I think it's extremely important right now, because what this technology can do is bring down a lot of the costs out of the system. We are seeing right now enormous opportunities to facilitate the elimination of frictions out of the market. Because of the programmable nature of the blockchain, you can automate all kinds of processes. You can embed all kinds of compliance mechanisms, and all of that is going to lead to world-class investor protections, all kinds of world-class servicing, and provide these assets that a lot of people are already familiar with, but just, again, having them delivered in a much more efficient manner. And that is going to, again, create cheaper ways of doing business, as well as creating the option for liquidity around these assets that so many people want to get in these uncertain times in the financial markets.
Definitely, and liquidity is definitely key. And security tokens have been a huge topic in the blockchain industry since 2018, when there started popping up with security token conferences, specifically talking about the tokenization of all stocks and derivatives, and the market for that is huge. So it really hasn't come to fruition yet. And of course, everything takes time, and it's really just still in its infancy. But there are some companies that are taking a step forward and trying to move towards that direction. Now, if I was running a public company and had stock on a market, and you came to me and said, you really need to be thinking about tokenizing this stock, and I didn't really understand the blockchain industry, I would ask, why? What's in it for the company and for the investors? And maybe you can elaborate on that and how that would actually, the changes that would help a public company.
Great question. So the first thing that I would say is that if you look back over the last 20 years, the number of companies that have gone public has been going down over time. So in my last job, I worked with a group that ran probably the largest, if not one of the largest, if not the largest, small cap mutual fund in the country. And my colleague Paul Magnuson and I used to talk about all the time how his investment universe was shrinking. Just the number of companies was getting smaller and smaller and smaller and smaller over time. That's because a lot of companies want to stay private. They don't want to deal with exchanges. But these companies that are small and that are growing, they need capital, not only to invest in the company, but they also need to retain talent and get the right people on board. How do you do that? You usually do it by issuing stock, and you do that by issuing stock options. Well, there are difficulties if you're not a public company in doing that. How do you value the companies when you're awarding these stock options or these stock grants? How do you record that? What if the investor, or what if the employee wants to leave or wants to sell his or her shares? How do you do that? So by tokenizing, one of the great things that you can do is that you can have this audible, immutable, better, faster, cheaper way of having a tradable stock, but you don't have to be public and go through all those things that people don't want to get involved with. I think for the broader society, that is a terrific thing, because over time, one of the best wealth creation devices that we've had in Western economies are these small cap companies. If you look at something like, say, Microsoft in 1986, when it went public, it had about a $200 million market cap. Today, the company trades at with a market cap in the trillions of dollars, and it's something like 50 million people were able to participate in the wealth creation that Microsoft brought about. Well, if the number of small companies are going away, that's a big problem for us as a society. And so, you look today at a lot of companies that go public. It's not the people that invested in the IPO that get rich off of it. It's the people who get in before that. And so I think having a broader investment class, and again, being able to get these assets out to more people, again, I keep using this phrase, better, faster, cheaper way. It's a tremendous wealth creation tool that's about to really change, how we invest and the way we invest our money.
Yeah, it's super interesting. And I'm starting to see some companies use it as an investment tool. And in your book, you also talk about how it's, decentralized finance is democratizing assets for people that are raising money, but also for investors as well, and just like lowering the barriers to entry. I guess you touched on having that exchange. You really go to the exchange because you need liquidity and you need access to the capital. And so can you elaborate on how that's shifting on, if I'm a startup trying to raise capital, or if I'm an investor, I don't have to go to an exchange and I can look for the tokenization of these kinds of assets?
Yeah, sure. So I think the democratization of assets is all about leveling the playing field for everyone to be able to have the same kinds of access to investments. And the blockchain is going to be able to do that in a major way. So that is something that is really exciting. If you look back over time, technology has been the way that has taken tools that may have been available to one person or to people who are wealthy enough to afford them, and then making them available to everyone. And I see the security tokens and this blockchain-based finance really doing that in a huge way. I think back to if you think about who are the elites in finance, the sort of Gordon Gekko from the movie Wall Street, he was really somebody that really embodied that. And in that movie, there's a scene where he's walking down the beach with a huge cell phone, and he's talking to Charlie Sheen's character about all these exotic assets that he's bought. You look at, just say, his cell phone. That was a status symbol in 1987 when that movie came out. Today, people have much better cell phones than what he had back then, and they get them at a better price. The same thing is going to happen for these vehicles that only the wealthy can get now. By putting these private equity vehicles and alternatives onto the blockchain, anyone's going to be able to go onto different websites or different new alternative trading systems, look for assets that fit their criteria, and be able to participate, again, in these wealth creation vehicles that are so important to a diversified portfolio and to a portfolio that has the best risk-adjusted returns available.
It's super interesting, and especially right now because of this decentralized finance and DeFi growth throughout 2020, and having interest-bearing accounts that you don't need a bank account. Somebody that's unbanked could get access to a micro loan, or they can have a few dollars and put that into a smart contract, and all of a sudden have interest-bearing accounts that seem to be much higher than the banks right now as well. And the amount of value locked into this DeFi contracts has gone from under $1 billion at the beginning of this year to over $10 billion now in a short amount of time. Do you see this DeFi movement as a step in the right direction towards what you're writing about in the book?
I think the future for DeFi is incredibly bright. And what you just mentioned about just this breakneck growth, I think it just shows the tremendous appetite that the market has for these kinds of products. By taking down those barriers to entry and by taking out intermediaries, there are fewer costs. If there are fewer costs, somebody, whether it's the lender or the borrower, is going to get a better deal. And usually there's some sort of sharing between those economics. And so in this time where interest rates are very low, in traditional markets, you can get very attractive risk-adjusted returns in the decentralized space. So I think it's long-term. It's incredibly great. I think though we've got to take a very measured approach to how we do this because again it's decentralized. It's new. There is sort of this Wild West kind of mentality. What I don't want to see is a lot of bad headlines coming out of this new marketplace. You saw with like the YAM protocol that came out, you had bugs in the system. So basic things like somebody checking computer codes, making sure that all the coding was right. Something didn't all match up there. You had with the case of Sushi Swap with the creator taking a lot of the money that was locked up. So I don't want to see a repeat of the ICOs in the sense that we get bad headlines, because once that mentality gets embedded into the public's mindset, it's hard to get out. So, again, I'd like to see a measured approach. I was an early adopter of some of the protocols such as BlockFi and to a lesser extent with Celsius. I've been extremely pleased with those products, especially given the volatility in the marketplace this year. So there are definitely good options out there that are more established. I would say to people that want to get into the latest and newest crazes, just do your homework, make sure that you know what you're getting into before jumping in, head first.
Definitely good advice. And to touch back on the tokenization of securities and using blockchain in multinational corporations, there are many multinationals that are already starting to integrate this technology into their businesses. The Enterprise Ethereum Alliance has 500 to 600 of the top companies in the world already working with private Ethereum blockchains. There's IBM, their Hyperledger, Amazon and Google Cloud and Microsoft Azure. You can all whip up blockchain nodes and start running infrastructure. But with all that, there still hasn't been a massive acceleration towards using this technology in the finance industry and the other industries. Is there something else that needs to be done to continue accelerating this trend?
Sure. I think you just have to realize that there are a lot of moving parts that go into making the financial system work. And so it's going to naturally just take some time. You're right. I mean, the list of companies that are involved right now is huge, and it's growing every day. I get very excited reading the headlines on a daily basis and just seeing more and more examples of companies from all over the world that are putting technology and resources and money into making this blockchain-based financial system work. And so I think that's going to continue. But again, there are a lot of different pieces that have to fall into place. And these big companies, they don't want to risk their reputations or their other revenue streams without making sure this technology is totally rock solid. What I will say is that, it's been incredible how fast this marketplace has been prospering. So like a year ago when we were looking at custody, there was absolutely nothing for things like for Bitcoin, for anything. Today, you've got all kinds of world-class custodians, whether it's Gemini, whether it's, Goldman Sachs has BitGo. You're getting those announcements from the OCC that they can have federally chartered banks starting to get involved. And so I think the infrastructure has really been developed. And so if you couple the development in infrastructure along with more regulatory clarity, that's what you're going to need to really get it going, because the benefits are going to sell this technology in and of itself. I mean, I look at something like what Figure Technologies has done with putting home equity lines of credit, mortgages onto their blockchain. They've been able to cut the origination time of a home equity loan from about 45 days to 5. That's tremendous. I mean, you rarely in a lifetime will see that big of a leap in terms of efficiency. And there are so many other cases that are like that are going to unfold over the next 5 to 10 years. So it's just, I think just give it time. It's a little bit like watching a penny double. It goes from 1 cent to 2 cents. And, after about 8 periods, it's whatever, it's 64 cents or something. It's not a lot of money, but the growth is just is huge. And so just give it some more time, and people are really going to start to notice this, how big this is going to be.
Definitely. And the benefits are clear. It's just a matter of, as you said, having that implementation, but making sure that it's rock solid and not, having multinationals tarnish their reputation if there are any, side things that happen. But that's also good for investors and, prospectors that are interested in this industry, because the benefits are clearly there and the path to what this is heading into is clearly there. And we're still early on. And, if you get involved at that point, then obviously the upside is a lot larger, right? So
exactly.
Yeah, so we're running out of time, Baxter, but for people that are interested in learning more about tokenization of securities and digital finance, what's the best way to get access to the book and follow your work?
Sure. I would encourage anyone to go to Amazon, Barnes & Noble. If you're in Europe, go to Waterstones or Foyles. In Asia, Open Trolley is selling our book. So we're being published by John Wiley and Sons. So we've got a global reach. You can find the book really in any corner of the world. It's called Digital Finance, Security Tokens and Unlocking the Real Potential of Blockchain. So check it out. Also, we have a website, Digital Finance Book, where we've got all kinds of updates on what's going on in the space, and updates around the book and its release, which is set to launch on November 17th. So in about a month's time from now.
Very exciting, Baxter. Well, I will leave those links in the description box below as well for the viewers. All the best moving forward with the book launch, and let's follow up in the near future.
Thank you so much for your time. Really enjoyed talking with you today.